Hello investors, I'm Sneha Vasudeo, your certified financial planner, and yes, I'm SEBI registered. I'm back with yet another interesting analysis. My research was recently featured on investing.com, and today we are turning the spotlight on a lesser known but high potential player in the Indian stock market, Fiem Industries. It's not just another company, it's a key supplier in the auto ancillary space, quietly powering India's two-wheeler and four-wheeler giants. In this video, I will be decoding the business, its market relevance, and what makes auto ancillary stocks like Fiem worth watching, especially if you're looking for a smart long-term wealth creator. Let's get started. Fiem Industries, a company that has remained under my radar for quite some long time. Let's understand its business. Founded in 1989 and listed on the Indian Stock Exchange in 2006, Fiem is not just your typical headline stock, but it is a crucial player in India's two-wheeler and four-wheeler supply chain. It manufactures automotive lighting, signaling system, rear view mirrors, sheet metal components, and plastic molded parts. In fact, it was among the very first in India to bring LED lighting to the two-wheeler segment. The company has extended to LED luminaires used for indoor and outdoor appliances and into intelligent solutions for buses and railways. This strategic diversification, however, contributes to only a fraction of its revenue. Over 99% of its income still comes from automotive segment, which brings us to its core clients. Fiem supplies to some of the biggest names in the automotive sector like Honda, TVS, Yamaha, Suzuki, Eicher Motors, Harley Davidson, and on the four-wheeler side, it serves Tata Motors, Force Motors, Mahindra, Hyundai, among many others. Now let's look at the financials. Over a 5-year period, the company's net sales have gone from 13,600 crore rupees to 24,000 crore rupees. That's a compound annual growth rate of nearly 12%. The EBITDA margin has also doubled in the same period, growing at a healthy 15% CAGR. So what exactly is driving this growth? A closer look at the revenue mix and some interesting insights are here. Nearly 43% of the company's automotive sector revenue now comes from LED lighting products. This is a key trend. As India moves towards energy efficiency and better visibility standards, LED is quickly replacing the traditional lighting in vehicles. The second biggest contributor is standard automotive lighting, followed by rear view mirrors and plastic molded parts. Here's what stands out. Over 92% of Fiem's business is for domestic manufacturers like Honda and Hero. Fiem's product is for two-wheelers mostly. Only a small portion, less than 6%, comes from replacement market or the exports, and almost 97% of its automotive revenue comes from two-wheelers. In short, this is a company that's deeply embedded in India's two-wheeler economy. Its fortunes are closely linked to domestic mobility trends and OEM demands. Now let's look at the charts. Fiem Industries is not just a strong business, it is also showcasing technical strength. On the monthly chart, the stock has been moving up steadily ever since COVID crash. From rupees 100 in 2020, it has gone over 1800 rupees today. That's not just luck, it's a long-term it's a long-term conviction by institutional buyers. On the weekly chart, we see a pattern. First, the stock goes up, then it takes a pause, and then it moves up again. These are called steady bases. The largest breakout that happened at 1540 levels, and then later the stock pumped up 20%. That is a strong move. Now let's look at the daily chart. This is where the details come in. We can clearly see two cup and handle shapes, both followed by a very strong breakout. And what happens next? The volumes sharply went up. This shows smart investor money being pumped in. The momentum indicator RSI. For Fiem, RSI has always stayed above 50, which is good. Right now, it is nearing 70. That shows very strong buying pressure. So where is this stock likely to go from here now? As long as it holds 1540 levels, it is quite a strong contender. The next support is at 1250 levels. This is where the stock had paused last time. In short, Fiem is a strong compounder for wealth creation. If it gives a healthy pullback, it could offer a new buying opportunity. In the next part, I will be talking about institutional conviction. Let's talk about who is investing in Fiem Industries, who believes in this company, and more importantly, who's putting in the serious money behind it. Let's begin with the ownership pattern. As of December 2024, the promoter holdings was nearly 59% in the company. That means the people who build the company still believe in it and they are not selling. That's always been a strong signal. Compare that to March 2024, when the promoters were holding slightly higher portions, 66%. So yes, there's a slight drop, but majority of the stake still remains with the original owners. Now comes the interesting part. Look at the mutual fund participation. Just a few quarters ago, mutual funds held less than 1%. In March 2024, it was 0.68%, but by December jumped up nearly 4%. This is a six-fold increase in very few months. The institutional investors are showing potential in Fiem. Foreign portfolio investors, or the FPI, have also raised the stake from 2% in March to 3.2% by December. Insurance companies have also added in their position. Now let's look at the mutual funds that are actually holding the stock. 8 funds have invested a total of 276 crores in Fiem Industries. This is a big exposure that comes from HDFC Small Cap Fund. It holds 221 crores of the shares. It tells you that one of the biggest AMCs in the country has made such a strong bet in this country. Then you have the funds like ITI FlexiCap, HDFC Transportation and Logistics Fund, Navi Aggressive Hybrid Fund, each investing 13 to 16 crores. These funds are carefully choosing Fiem Industries. So what does this mean? It means Fiem Industries is no longer a small ignored stock. It's now on the radar of mutual funds, foreign investors and big institutions. The smart money is moving in. And then what happens? A trend picks up. Up next, I will be giving my personal feedback towards this stock. Fiem Industries is not just another auto ancillary stock. It is a well-positioned player in a growing sector, backed by strong earnings, increasing mutual fund interest, and technically sound chart structure. The business is expanding, the stock is gaining momentum, and serious investors have taken notice. But like every opportunity comes its conditions. You will have to check the risk to reward of this particular stock. For now, the signals are positive. Fiem is showing strength. Whether it turns into a long-term compounder, that's a decision built on discipline, not just excitement. Before I wrap up, if you're wondering what I do with all this research, here's my answer. I maintain a long-term portfolio that's listed on my website. The link is in the bio. I add only a few select stocks, the ones that pass my filters on fundamentals, technicals, and risk to reward. I discuss many stocks here on YouTube, but not all of them make a cut to my portfolio. The question is, will Fiem Industries make the cut? That only my paid clients will know.